Welcome to Amplify, a podcast series by the Association for Accounting and Marketing. I'm Scott Dine, Principal and Technical Director at Catalyst Group Marketing, and I'm your host for today's session. Joining me today is Amanda Wilkie. Amanda is a consultant at Boomer Consulting, where they provide consulting services for CPA firms. Amanda is a recognized expert in the profession and also regularly speaks and writes on blockchain and cryptocurrencies and their impact on the profession. Welcome to the show, Amanda.
Thanks, Scott. Happy to be here.
Great. So for everybody listening, if you like what you hear in this podcast, please do me a favor and like or subscribe to the YouTube channel or share using the share feature to send this to a friend or a colleague. Now let's talk about blockchain technology, and more importantly, why people in the accounting industry should care.
Blockchain technology it's difficult to really define and to explain. And I can tell you it's a distributed ledger. It is secure because it is encrypted. Distributed means that there are multiple copies of the data distributed throughout the network. But I was having this conversation actually with a partner from a top 30 firm recently, and he said, "Please don't tell me that again. Please don't tell me that it's a distributed ledger and it's secure." And so we had this conversation, and I agreed with him. I mean, when's the last time you went to your IT leader and said, "Tell me how email works? Tell me how an email gets from one place to another." We don't question how the internet works anymore, but yet we're really trying to understand and define how blockchain technology works. And really it's complicated. I mean, it's more than a data structure. It's more than new types of programming languages and new types of technology protocols. It's very, very complex. So I think that we're at the point in the profession where we need to understand that this technology is evolving very quickly, and there's a lot of very intelligent people who are working on that aspect of it. But what we really need to focus on is how it's really impacting our clients. Because if you're working in a firm that has ag clients or supply chain or retail clients, and financial services, of course, is what we first think of. But if you have clients in any of those areas, your clients are already being impacted by this technology.
No, that's an excellent point. Yeah, it's one of those things where it seemed like kind of this far off potential, a number of years ago, but now it's been around for almost a decade, and so it's here and it's being used all over the world in many cases.
Yeah, and Forbes recently did an article about the blockchain Big 50. So these were companies, 50 companies over $1 billion in valuation or revenue that all had projects going on in the blockchain space. So I think only 10 out of those 50 actually had projects that had moved into production, but they're all really paying attention to it. And they're paying attention to it in different areas. So they're looking at ways that it can help add efficiency and add transparency, if you will. Transparency with security, though. And I think that's the beauty and one of the balances of blockchain is that it can be secure, but also be transparent at the same time.
No, that's an excellent point as well. Now, there are quite a few. Now, Bitcoin is a big one that a lot of people have probably heard of. Now, I read somewhere that there are over 500 examples of cryptocurrencies out there. And some of the big ones are like Bitcoin, Litecoin, Ethereum. But one thing I also noticed today, in fact, I looked it up before we started this, and as of today, May 30th, 2019, one Bitcoin is currently valued at $8,725 and change. And the all-time high was about $19,650 back in December of 2017. But just 30 days ago, one Bitcoin is worth about $5,200. So, it's a currency, but there also seems to be quite a volatility in the value of that currency, yes?
Yeah, and so what we have had is an evolution from just cryptocurrencies to crypto assets. So some of these tokens, so we can call them tokens, we can call them cryptocurrencies, we can call them virtual currencies, coins, whatever we want to call them. But Bitcoin, of course, was the first one. So most of the cryptocurrencies that came after that have been modeled off of Bitcoin. But you have some that are intended to act as a currency, like you mentioned, Litecoin and Bitcoin. But you have some that are now designed as securities. So those are our security tokens. We have some that are designed as utility tokens. So if you and I are operating on the same network, we can use this utility token to settle our transactions, if you will. So there's, now if you look at all the crypto assets, not just cryptocurrencies, we're up until the thousands of different types of tokens. It's crazy. I mean, you can, Scott, if you want to create a Scott coin, you can do that. Yeah, we can all have our own.
Sounds like a great idea.
Right. But you mentioned how volatile these cryptocurrencies are, and there are many, many different factors that play into the price of these. It can be not only the project that these tokens or these coins are supporting. So, for instance, Ether is the token that is associated with the Ethereum blockchain. So it could be the interest in the network itself. So Ether may be impacted by the interest in the Ethereum blockchain. There's also things that happen on social media that impact the price. There is interest from the developer community that can impact the price. So there's many, many factors that go into that price. Now, the interesting thing is when you look at your classic cryptocurrencies like Bitcoin and Litecoin, there is not anything backing these cryptocurrencies. So it's not like it's the US dollar or anything like that. So that contributes to that volatility as well. Now, what we have seen is actually, again, kind of an evolution to where now some of these cryptocurrencies can be pegged to either a commodity or another currency, even another cryptocurrency. Okay. So Tether was really one of the first, and these are being called stable coins because, of course, being pegged to something should make it more stable, just as the name implies. Yeah, so I think that is another interesting development in this space that we need to be aware of, and firms out there need to be aware of, is that there is an evolution, and now we're having some of these cryptocurrencies that may start to really act and adjust to the market as just like currencies do. So stable coins, I would put that one on your list of things to study up on and keep abreast on. Okay,
no, that's very interesting, and I think that's probably a good segue into kind of the next question, which is kind of the real meat of this topic, and that is, what does this technology mean for the accounting industry in maybe a little more practical terms?
That's an excellent question. When it comes to things like tax, I think we're all trying to still figure that out a little bit. The first and only guidance from the IRS came out in 2014 that said that these crypto assets are just that. They're assets. They're not really currencies. I think it was 2018. The AICPA actually provided the IRS a list of recommended FAQs and recommended responses to those FAQs. So the IRS has said that more guidance will be coming soon. Now, they didn't really define when soon is, so
Right.
You know, take that as you will with the IRS.
Sure.
But I do think that, you know, we're still trying to figure out what it means on the tax side of things, and I think those will evolve as well. Um, when we're looking at other areas that you know, that would impact our profession, looking at audit, and again with blockchain, you have that intersection, or that place where we can be a bit more transparent while still being secure. So if we were both operating on the same blockchain, Scott, you know, our relationship and our agreement would say that we both have access to the transactions that pertain to us. So that's that transparency piece. But other people that would be operating there wouldn't be able to see those transactions. So that's that security piece.
Okay, and privacy, sure.
Yeah, so if you think now about the, you know, how we have data in different systems, and you and I have to decide which data that we want to share, and then we have to have an auditor come in and actually look at that data and make sure that, you know, that we are adhering to best practices and we are adhering to the law. You know, now this is going to be a bit more transparent. So now if our accountants are actually operating in the same environment, they'll have access to that data much more quickly, at pretty much real time. So I think it's not going to make the audit go away.
Right.
I repeat, auditors are not going away, but we will have a new tool and we'll have access to data that we never really had before.
That is really interesting. That's kind of a, especially with kind of the privacy portion of it and the transparency portion, and then just general access to everything, and ensuring that everything is kind of accurate and agreed upon on both sides of the currency going in. So I'm sure that would probably make the auditor's job, you know, I don't know about easier necessarily, but you definitely have more reliable data kind of heading into it.
Exactly. Much more reliable data.
Okay, great.
Yeah.
So now to kind of transition into like how this affects the, you know, really the audience of this podcast, which is kind of the marketer or business developer for accounting firms. So what should they be doing? What should a marketer or a business developer be doing kind of with this information?
Yeah. Well, let me share with you a couple of examples of how blockchain is being used. And I love this example because, as I mentioned, you know, if you have clients that are in ag or supply chain or retail, you need to be understanding how this technology is going to impact them. So, you know, we hear all the time about food recalls, right?
Sure.
You know, and I think I was so excited when there was the recall on romaine lettuce, because then it was, you know, it was actually healthier to eat junk food than it was to eat salad. At least reduce the risk of some of the that, you know, and having that contaminated product. Well, Walmart and IBM did a proof of concept in China, and it started back in 2016. And they tracked pork on the blockchain. And they found that they were able to identify the source of product much quicker, because again, it was a more transparent technology. So just last year, Walmart said that it is going to mandate if farmers want to supply leafy green vegetables to Walmart, they're going to have to opt in to using this technology. Now, that technology is the IBM Food Safety or Food Trust program. And if you go to their website and look at it, it's super cool. You can track, you know, where your product came from much quicker. So again, if we think about our firms, we need to understand this technology, because we need to be able to have these conversations with our clients now and help them understand how this technology is going to impact them. So if we're looking at an advisory services standpoint, that's something that, you know, that everyone in the firm, not just our marketers, but everyone in the firm really needs to understand. We have the opportunity at this point to be those educators to our clients, and we should be pushing out information to our clients about this technology and how it's going to impact their particular industry. Now, another example that I love, and I sent you an email about this one. It's a new web browser. It's a blockchain-based web browser called Brave. And the token that is associated with Brave, or the cryptocurrency, if you will, is called the Basic Attention Token. And so this new browser, it actually blocks all of the technology that typically tracks what sites you're going to, what your interests are, so that things can be marketed to you more specifically. It blocks all of that. But it allows me, as the person who is browsing the internet, to provide you, the company whose site that I am visiting, some of those basic attention tokens. So if I like your site, I like your marketing, I can provide you some of that that cryptocurrency as a payment. You can also provide me and pay me in these basic attention tokens if I let you track some of the things that I'm doing. So
that's interesting.
Yeah, so this is an example of how this technology is really removing some of the intermediaries of that relationship and replacing it with the technology, and it puts the relationship much, much closer to the person who is consuming the information and the organization that wants to consume the information, and the individual who is giving the information. So I know that's kind of a big thing to think about, but as marketers, we need to understand how some of these advances in this technology is going to change how we reach, our audience. And it is going to change a bit. It's going to change everything that we do in our firm, all aspects of our firm.
Now that's interesting, because that could take and put, depending on if there's that Brave browser, and if there are others that allow people to kind of consumers to surf the different pages on the internet, that would actually take and kind of flip some of the dynamic of doing Google advertising, Google Analytics, trying to figure out, because if that browser is only providing so much information and then requiring some sort of transaction in return for that data, then that really kind of puts the power in the user's hands as opposed to Google's hands.
Exactly. So think about it when Google doesn't have that information to sell to companies. That is one of the use cases that just, I think, is absolutely fascinating. Now, I will say that they announced this browser at the Consensus Conference, which is a huge blockchain conference in New York. They announced it, I think, 3 years ago. So it's a very new concept. It is working, and it is out there now. I do use the Brave browser for some of my personal things. So I don't want your listeners to think that this is going to disrupt them tomorrow, but
Correct.
it is something that we need to be aware of. And as marketers and as accountants, we need to understand, and we need to just keep our eye on this technology and understand how it is evolving.
That is awesome. That's really fascinating information, and it's just one of those things where it's a great opportunity to take and speak with someone like yourself that's kind of in the industry and really kind of knows this information so well. So I just wanted to thank you so much for joining us today, Amanda. You've shared a ton of great information, kind of insight, and as well as some tips and some direction. And I think that's very valuable to our listeners.
Very happy to be here, Scott.
Great. So this wraps up another episode of Amplify, and thank you so much for joining us today. Please remember to like or subscribe to our YouTube channel, or make sure to share this with any friends or colleagues. And stay tuned next month for another episode from the Association for Accounting Marketing. And always remember to aim high.